Hey guys, Chris Kavanaugh with the Kavanaugh Group at Keller Williams Realty, and doing what we love, loving what we do. And I am here and blessed to have Trace over at our office today to talk about who he is and what's going on with the mortgage market. So, Trace, tell us a little bit about yourself.
Thanks, Chris. Thanks for inviting me over. Trace Sanchez, Waterstone Mortgage, and I've been in the mortgage business about 24 years now. Started out with the banks, and then kind of gradually migrated to the lender side of things.
How long have we been working together?
We've been working together, I would say, about 2 years now.
2 years? Yeah, one of our good friends referred us to work together, and as soon as we had a slot open in our referral database for mortgage lenders, we added Trace, and Trace has done nothing but an amazing job for all our clients. Really communicates at a high level, and that's really important, right? Make sure we're communicating at a high level. Removes stress, reduces fears. So we love working with Trace. He's not our only mortgage partner in our power team, but he is definitely one of them for sure, and has earned the business, and will do a great job. So what are some basic things that buyers need to know, especially if they've never bought a home or if it's been a long time?
I think the biggest thing, some of the biggest things to think about when you're buying a house is, where do you want to be financially as far as a monthly payment goes? Because that's going to be key. If you're not comfortable, you're the one that has to make the payment, and if it's too high and making you uncomfortable, then that can be something that is going to cause you problems along the way. So think about what you're comfortable. It's one of the main things I ask when I'm interviewing a customer is, what are you comfortable paying a month? And sometimes they end up going over that amount, but it gives us an idea of where to put them. So think about where you want to be on a monthly basis. Think about your credit, very important. These days there's a million different apps you can get on to check your credit. And so knowing kind of what your credit score is going to help you a lot in negotiating what type of program you're going to want to get into.
Cool.
Also, finances, knowing that you are going to more than likely have to have some money for down payment and closing costs, and to have those things planned out, whether it's your own money or a gift from a relative. Those things are important to think about before applying.
Awesome, thank you. And I love that Trace, and this is one of the things we love about Trace, is that he doesn't approach a mortgage lending process with a client from, hey, what is the maximum amount of money that I can write a loan for this person, and then push him to do that. As he stated, he's going to ask you what a comfortable payment is, and as you're out there shopping for lenders, whether you're here in New Mexico and you give us a call, or you call somebody else, or you're out of state, always pay attention to those cues, right, from your real estate broker or your mortgage lender. And if you decide to push it over, well then, hey, look, our clients are grown adults, but we always advise, hey, what's comfortable, and let's start there, because no one likes to be housebroke. So.
Right. Absolutely, and they change depending on where they want to live and those kinds of things. They might change that monthly amount that they're comfortable with, but that we give them that option.
Yep. And then on credit scores, should they and a general idea you said on credit score before you get started? How do mortgage credit scores compare to like Credit Karma? Is that an accurate comparison?
No, and I'm glad you asked that, because we get that a lot, and when we pull their credit, it comes out different from what they pull on Credit Karma. And the difference is those are soft pull credit reports.
Okay.
So they use a different algorithm to create those credit scores. So 9 times out of 10, when I pull a credit score, it's going to be less than what you pull on Credit Karma. So every once in a while, very seldom, I'll get a credit score that came out higher on my site than Credit Karma. So it does vary. But I love it because it's keeping people conscious about their credit. It's making them want to. These people are, I'm at a 600, I'm trying to get to a 650. They're just very involved in it, and that makes it a lot easier on us, and it gives us an idea of where they're at. So very important. Try to keep your credit above a 620. Is going to be ideal, is above a 620. The higher, the better. It's going to play into your rate, the type of loan program that you get. So. Preferably to be in the 700s, but we can go down as low as the 600 credit score on most programs.
Cool. And so, is it a good time to buy? Right? The big question, I know we get it out in the field, we do this every day, and we get it from our clients. What are your thoughts? Throw some input there on.
So and people ask me this all the time, and I think what I say is, how much are you paying in rent right now? You know, if you're paying $1,500 in rent, and you can get a mortgage for even if it's $1,800 a month, the difference there is that you're throwing $1,500 out the rent that you're on rent that you'll never see again. At least, you know, when you're buying a house, that's an investment. You're going to get that, more than likely get that money back.
And if you guys ever, sorry Trace, if you guys ever want a rent versus own comparison to what if you're currently renting, and don't get me wrong, there's a right place and a time that renting makes sense, right? Like if you're going to be in a city for a year, probably not a great idea to buy, right? But if you want a rent versus own comparison, kind of see, you know, what your 5-year plan would look like if you continued renting or bought, you could give either one of us a call, and we'd be glad to kind of break that down for you and go through the numbers. But you'd be really surprised how much money you're throwing away when you're renting if you're in a market long term.
Absolutely, and the other thing is rent is the cost of waiting to buy a house. I mean, our prices are more than likely not going to just, you know, plummet down. Right, yeah. They're going to continue to go up, maybe at a slower pace than they have the last year, but they are going to continue to go up. And that's the great thing about investing in real estate, is that you gaining equity on your investment. But at the same time, if you're looking and waiting, and well, should I wait till rates go down? Another thing, rates. So everyone thinks that, you know, rates are at a high rate, but if we look historically, you know, they're really not at a bad
They're
point.
not.
We were spoiled for a very long time with 3 or 4% rates. Yeah. And so now things are kind of stabilizing, you know, and 6% rate is not a bad interest rate. And the cost of waiting, say another year, you think maybe rates will come down in a year, the value of the property is going to continue to go up, and that's going to, you know, kind of wash any kind of savings out. Yeah. So
and that's another conversation that, you know, doing it on pen and paper and kind of putting the numbers in front of you, you can really see that, you know, let's say it's a $500,000 house, and the market, actually our local micro market here in Albuquerque, Rio Rancho Metroplex, actually hits the 9% year over year increase on values that they're anticipating. And then the decelerated, like what you were saying, they are going to start appreciating at a slower pace, but decelerated appreciation is really the term for that, and just means that we're getting back to normal. In case you don't know, like a normal, healthy property value increase all around is from like 3 to 4% annually, and that's typically what we look for in market climbs. So we benefited from some great value increases, and we have our housing shortage isn't going anywhere, so it's definitely a great time to buy. There's about 1,800 properties on the market today, and I think 2 months ago we had 600, maybe less, single family homes. So the inventory is going up. It's a much better market for a buyer to get out and shop in, and have an opportunity to purchase a home. You're not going to be competing with 10, 15 buyers anymore, maybe 1 or 2. So.
Right. No, I completely agree. Still a great time to buy is what it comes down to.
It's always a better time. It's always a good time to buy versus rent, right? Or to own versus rent. Don't pay someone else's mortgage, pay your own if you're going to be somewhere longer than a year and a half. All right, that was all great information. How about loan products? Just give us a brush over. We can have clients call for.
So Waterstone carries all your standard programs, your conventional FHA, VA, USDA. You know, we do construction, we do rehabilitation loans to help improve properties. We have all those programs that are very competitive. We also have added a lot of niche programs to help out some of the buyers that you know, maybe don't have as much down payment. So we have programs all the way up to $975,000 that will go 100%, so zero down payment.
Wow.
We also have, of course, MFA for our first-time home buyers, still our most popular program. You know, these programs we can get buyers in with as little as $500. More than likely it'll be a little more than that, but with minimal down payment compared to putting 3 or 5% down. So we've got a lot of programs.
So we don't need 20% to buy a home?
Absolutely not.
Okay, that's one of those myths that floats out there. I think it's been debunked, but it's still out there that you need 20% to buy.
Absolutely. Very seldom do I see anybody put 20% down anymore, unless they're buying an investment property or
something that requires it.
Something that would require more down payment. But
Cool.
absolutely, zero down payment on a lot of programs these days to help people.
Sweet. Sweet. Well, I appreciate it, Trace. Is there anything else you'd like to add?
No, just please feel free to call me if you have any questions regarding mortgage financing, interest rates. Rates vary depending on credit scores, loan to value, a lot of different things. So if you're interested in knowing what rates are at or knowing what kind of programs we have that was specifically tailored to you, please give me a call. I can be reached at 505-238-5952.
Awesome. Thanks so much, Trace. Guys, thanks so much for tuning in. Hope you have an amazing day. If you're even thinking about buying a home in the near future or next year, give Trace a call. Get the process kind of started. Figure out where you're at, and we'll help you get into a home. Y'all have a wonderful day. God bless.
Thanks a lot. Bye-bye.